believe we can start straight away. So a very good afternoon to everyone. I'm 𝗙cie𝗀𝗁𝗃𝗀 from the Malta Chamber. Very warm welcome to all of you, and thank you so much for joining. It's indeed a great pleasure to have you this afternoon for the Malta Chamber once again collaborating with Vistage Malta, present to you the Confidence Index Q3 survey results, which will showcase somehow a collective window on how business leaders in Malta are perceiving the economy's future. Worth noting and highlighting, because I guess some of you might ask this question later on. Worth noting that the results we're presenting to you this afternoon are indicative prior to FATF announcement last week. So all survey results are prior to that important announcement last week. And possibly the webinar will provide more insights that will surely help your decision making as a business leader in Malta. So without further ado, I'll give you a quick overview of how we're going to proceed. We'll have a quick introduction from our president, the president of the Malta Chamber, Ms. 𝗙𝗂𝗀𝗃𝗀𝗁. Soon after, we'll have Nathan Farrugia from Vistage Malta to take us through the survey results, and then to compare the local results with the international scenario. We're delighted to have with us Patrick as well from US Vistage. So I'd like to invite Ms. 𝗙𝗂𝗀𝗃𝗀𝗁, President of the Malta Chamber.
Good afternoon all, thank you Keith. I think the results of this survey are particularly important because the survey was taken during June at a point where businesses were seeing themselves out of the, let's say, intense period of the pandemic, and therefore hopeful that we can put the pandemic behind us. And at that point, we're not really factoring in the potential of a negative FATF outcome. So this is a very important baseline survey. I've seen a lot of comments on the lines of how will the FATF decision impact business? Have you surveyed this? Of course, we will survey this in the next confidence index survey together with Vistage. But I think this provides a very, very important baseline, and it is a survey that we will return to for comparison's sake as a point of reference, because it shows that at that point, pre the FATF decision, local CEOs were actually full of optimism. I will not go into the details of the results because that is Nathan's job to do after my introduction, but it is very clear that 90% of businesses were eager to invest, eager to employ more people. So any differences that we will see between this baseline survey and the next survey in a couple of months' time will be predominantly a result of the FATF decision. And therefore, I think it is very important that we take in the results of the survey, that we acknowledge that coming out of the critical phase of the pandemic, our businesses were actually eager to go, ready to invest, full of positivity about the future. Many of them had high hopes that the economy will recover strongly. And I think this is the context that these survey results provide. A very important baseline taken in a very small window. I don't think that when Vistage actually conducted this survey, they realized what an important snapshot of business sentiment they will be capturing. Because of course, nobody could actually map out what would happen in the following days after the survey was taken. But I think it's very, very important that we actually take in the results of the survey, because it's probably the most reliable baseline that we have against which be able to measure the impact of the FATF grey listing. It was a point in the economy where we were actually opening up again, where we were actually seeing a decent summer for the tourism industry. where we were proud of our achievements in terms of vaccination rollout. And when we were positive that the next year will be a much better one for the local economy. So with that scene setting, I leave it to Nathan to go through the details of the results. And please do take these results in, because although one might think that now that there's been an FATF decision, these results are not relevant anymore, I personally think they are even more relevant because they are the most reliable baseline we have. Thank you.
Thank you so much, 𝗙𝗲𝗰𝗴. So Nathan.
Well, thank you very much to the Chamber for supporting this action and seeing it being rolled out the third time is very useful, because it starts to give us a stronger trend measurement and analysis. What's also interesting is that we've doubled the numbers of participants, which means that the Chamber and its communication with its members has been much more effective in getting people to fill in the survey. We've actually doubled the number of data points, which obviously makes the data even more thorough and relevant. And I second what Marisa said. As a baseline, it is excellent to be able to compare in future with whatever happens between now and the next survey. Clearly, the grey listing is the major factor, but let's see how that affects mood. Essentially, the Vistage survey really looks at perception. It looks at what business leaders are thinking at this point in time about their business going forwards. And what we've seen around the world with 25,000 CEOs in Vistage around the world is that they typically tend to predict the way that the economy is going to work. Why? Because obviously CEOs are the business leaders that are making decisions, and their investment counts in driving the economy forwards. So if they are buoyant, that's going to have a positive effect on the economy. If they are not, that has obviously a negative effect. So we know that your insight, your perception is very important for us to understand when it comes to looking to the future of the Maltese economy, but also now with the dimension that Anne will bring, looking at the international aspects of how things are happening outside of Malta, for us to be able to compare and contrast. Yes, there are our local idiosyncrasies, our perhaps dependence more on tourism than maybe other countries, but these things are factored in and are still useful to compare. It also makes sure that we look at ourselves as part of an international community rather than just an island. Vistage is growing locally as well. We have over 50 CEOs that are members of Vistage and attend the peer groups and are working with over 100 executives then within those companies on executive coaching and support. So if you're interested in that sort of side of Vistage, please get in touch. But in the meantime, let's focus on the survey. I'm going to share my screen. This report will be on vistage.mt for download for you to be able to look at it in more detail. And Chamber will also be communicating with you directly via email to send you links and important notes related to the survey. So I'm going to skip through for need for speed. Essentially, what we're seeing here is, as I explained earlier, the trend of positivity that we saw. Comparing Q1 to Q2, we saw a dip in positivity, but now that's significantly improved in the Q3, which implies that across many aspects of us looking at business going forwards, there is a positive perception of how things will play out. And this affects every aspect of business. And we've asked a significant number of questions related to every aspect of or most aspects of business, from human resources to supply chain through to investment. And this survey looks at those collectively, pulls the data together collectively, but also breaks them down, as we will see. Whilst there is this positivity and this keenness to move forwards, there is, however, a major factor that is concerning business leaders in Malta, and that is the ability to recruit the human resources required to be able to deliver this investment, this profitability, this growth. And we can look into the detail, but essentially here what we're seeing is that 61% are concerned that hiring is going to be a challenge, either because they are experiencing it already or because they expect it to be difficult. And this relates to, yes, the availability of different types of skills required, including management and leadership, as well as the lack perhaps of the international cohort of people that left Malta as the pandemic struck. So these, I think, are some of the concerns. We will also show later which areas these concerns are from most. Looking at the economy, yes, we can see that 64% of you feel that the economy is going to improve, and if not, if not stay the same, it's definitely going to improve over the next 12 months. And the profitability again is positive. So we're thinking here that the positivity and the revenue growth will also increase our profitability. There is also a keenness to, if not increase, to at least remain the size of business that we are. We had some issues related to the numbers we saw in Q1 when it came to the steadiness actually of the number of employees in business. And this was mainly due to the investment in the furlough schemes that government provided for us to be able to retain employees, perhaps compared to other countries where they hemorrhaged a lot more of the employees during the COVID period. So we were quite strong in that. But here we also are seeing that actually we are planning to increase and recruit more. I'm going to skip these because these are data points repeating. Okay. Again, we expect, vast majority of people thinking that their services and products are going to increase, if not remain the same. The retention issue here comes up as something that is of some concern. If we look at why employees are potentially leaving the organization, which also is affecting our ability to retain talent, which compounds the problem of not being able to recruit talent, double-edged sword, is the main indicator here is higher salaries. So there is a perception or an understanding that employees are leaving to go for better salaries elsewhere, as well as obviously better benefits, which also factors in with that. Flexibility doesn't seem to be too much of a concern, with less than 10% worrying that flexibility is an issue. And obviously we've got used to a sort of hybrid way of working now. And I think even the most structured companies and businesses are allowing much more flexibility, which means that the reason to leave for employees is less about the flexibility perhaps than they had, or the limited flexibility that they had before COVID. So this being forced to become flexible has actually helped retention, if we look at it from this perspective. Here we can see again, as said earlier, the hiring challenges are impacting the ability to operate business at full capacity. So if we look at the actual type of employees that you are struggling to find, the largest cohort of employees is the skilled workers. Okay, so we can see that skilled workers are scarce, and you are looking for more, as well as professional staff as a close second. So this is sort of highly skilled or professional people that companies are looking to engage and struggling to find these people. Less of an impact management and senior leadership. And interestingly, obviously this depends on who answered the survey, but less than 20% have issues with frontline staff. We've asked both here and internationally what you are doing to be able to help the cause of being able to attract talent or retain talent. And here we have a mix of alternatives that people have been attempting and working with to be able to retain talent or attract new talent. Boosting wages was one that obviously, if you're competing with higher wages, and clearly there's an indication that higher wages are causing people to move around and increasing job mobility, boosting wages is as a necessary evil, I guess. But also at the same time, there is more keenness to develop the existing workforce and retain talent. We know as business leaders that retaining talent is far easier than recruiting talent. So let's do our best, as it seems to be the case here, to keep the good people we have. There is an element of flexibility coming here. Hiring bonuses is mentioned. Refining recruitment strategies, being sharper with the way that we recruit, as well as potentially looking at apprenticeship or internship programs to be able to bring people at an earlier stage within the business and allow them to grow within your business, rather than perhaps attracting them at a higher salary bracket when they've already got experience and qualifications. So, a strategy here perhaps of bringing people in at a younger stage, at a younger age, to be able to help them grow within your business, helping retention as well. We asked you about whether you would be thinking about bringing your teams back to a full on-site way of operating. Obviously, manufacturing have not left the building. They've been struggling through COVID on-site to be able to keep up with activity, but most of the office people have moved to fully remote or some sort of hybrid. However, it seems to me that the plans for most business leaders ask is that they want to go towards the fully on-site way of working, and which is interesting because when we spoke the last time, there was an understanding, a perception that actually hybrid is the way to go, and hybrid will be the way of the future. It seems to me that there's quite a few people here who prefer to have their whole teams on site, perhaps experiencing the office vibe, as we've started to see, especially if we start to remove the masks, gives a feeling of camaraderie. And I think this is something that leaders like. They like to have their team around them. And I think this is influencing this perception of whether we continue to work remotely or not. At the same time, we must consider that if flexibility is a reason for people to leave, or lack of flexibility is a reason for people to leave, we need to make sure we allow some hybrid setups if we want to retain the staff that have got used to the flexibility of avoiding traffic and working from home and working the times that they want to work, particularly if they have young kids. Okay, we have 40% of you that have actually asked your workforce what they prefer, and another 20 or so % of you plan to ask your teams what preference they have with regards to the working model, whether it's again hybrid, remote, or fully on site. Question around masks. Again, the laws changed today where masks can be removed outdoors with some restrictions. How is this going to affect the office going forwards? The vast majority of you are saying that masks will be required throughout this year when indoors. And I suspect that this obviously is going to be impacted by the decisions that our Department of Health takes going forwards for the country as a whole. Interesting policy regarding vaccinations. We asked you your thoughts around what you would prefer when it comes to vaccinations for your employees. Seems that most of you are recommending but not forcing your employees to get vaccinated. That seems to be the major preference. And then the least preferable is providing incentives or rewards for those who get vaccinated. I think our country has done very well with vaccinations, or perhaps this is driving this no need for a financial incentive or any incentive or rewards to get vaccinated, because the coverage of the vaccination in Malta has been excellent. Again, it's really educating and encouraging employees to get vaccinated. That is the major preference. Okay, back to business. Effects of inflation that are affecting your business. There are a number there. Depending on obviously the nature of your business, you will be impacted in different ways. The greatest one is the higher costs of labor. Again, if we are losing staff and we're trying to keep them by boosting salaries, this is going to increase our labor cost. If we're trying to attract talent where they're being offered better salaries or leaving for better salaries, we obviously need to attract people at a higher cost, and this is affecting our profitability. There is an increase in supply chain cost, whether it's increase in prices from vendors or increase in shipping costs or the actual raw material itself. And these obviously are affecting the companies that depend on supply chain for their main operations. So these are the main issues, and we know because of the difficulty and speed of obtaining raw materials and services from outside of Europe, this is having an effect on us, particularly in delivering those services thereon or those products thereon because of timescales. Let me just skip through. We've seen, again, already a start to increase in wages. We know that many companies had to perhaps even lower wages or cut costs during COVID to be able to keep the business afloat. And it seems already that some of you or many of you are already starting to increase those salaries to be able to retain your staff, as mentioned earlier. Interestingly, the vast majority are actually considering also technology to be able to reduce labor burden in your product and your service. So automation here, very interesting to see this uptake. Very, very positive. I was quite surprised to see that over 60% are actually saying we need to use technology to be able to reduce labor burden. And obviously, because this is being driven by the brain drain and the limited access to human beings, this has become much more of a necessity. And I think also the Chamber is doing quite a bit of work in promoting AI and use of technology in order to improve business performance. So that's all extremely helpful. There was a question around travel, and we can see that there is a lot of uncertainty around travel. Some people expect to travel soon. Some people are suspending until next year, but the main theme here is the uncertainty, particularly related to COVID certification, travel requirements of testing and PCR tests. This obviously creates discomfort when people are looking to travel. What I do know from CEOs in Vistage that we speak to on a regular basis, they are significantly curbing the need for travel for meetings, since now everybody seems to be so comfortable online. Whereas before, the tendency was to jump on a plane and go to a meeting, an international meeting. That has now shifted towards online and will remain such, saving significant costs to these businesses and reducing CO2 emissions, I guess, as well. Okay, so that's the summarized version, and we will have this, stop the share. We will have this available on vistage.mt for you to download. You simply need to put in your details and download the report and look at it in more detail in peace and quiet, and by all means discuss with your leadership teams and figure out how this helps guide you to make better decisions moving forwards. Thank you.
Fantastic. Thank you so much, Nathan, for those insights and for sharing with us, taking us through the survey results. Glad to hear the participation this time around was double participation when compared to Q2. So as 𝗀𝗀 said earlier, this is indeed a very reliable baseline moving forward following last week's FATF announcement. So I'm intrigued to know how these results compare internationally. So I invite Patrick from the US now to share her insights on how these results compare internationally.
Thank you. Pleasure to be here to share with you some of the insights looking at the US and the UK, what we're seeing with the confidence index and how Malta compares. And certainly, as Nathan shared, great optimism that we're seeing in the Malta data, which is exciting. And Marissa, I loved how you said that this is a snapshot or a baseline. And certainly we have a lot of snapshots of data through the pandemic that can show how business is projecting. But when we think about the confidence index at Vistage Research, we have conducted that in the US since 2003. And with a certain volume of data over time, we're able to see that, in fact, the CEO Confidence Index is a predictor of GDP, gross domestic product growth over time. So we know that this is a leading indicator, just as Nathan said, that over time we'll be able to map this with some key indicators in Malta to be able to prove that out as well. So understanding that small businesses are investing, they're projecting things at a greater pace, and it's going to be an indicator of what's going on in the economy. So today we're going to look at the latest findings from our UK survey, US and Malta, laying them all over together, really seeing those trends so you can get an idea of where you might compare and what we're seeing. And certainly not quite as optimistic, although every country has their own pace at which we've reopened, even within the US, that varies by state, but definitely starting to see that pent-up demand being released as the restrictions lessen. So if you're a little bit behind in terms of those restrictions and some of those just now being lifted, you're going to start to see that surge in pent-up demand. When we look at the confidence index, we saw that the US and the UK, our indices continue to rise, and we've seen that since the bottom. So this time last year in June of 2020 was when we reached the bottom, and we've had that slow climb up with some of them being more significant than others, these increases quarter over quarter. And the UK has seen the same, although they definitely had a bigger jump as they had probably got their arms around the pandemic earlier and started to see that pent-up demand earlier. But then when we overlay our Malta data, we see that after that dip in Q1, and when you think about what was going on in Q1, the restrictions that had been put in place, the shutdown that was just supposed to be a couple weeks and wound up being a little bit longer, you've definitely bounced back from that, now confidence above what we see in both the US and the UK. And really what's driving that increase in optimism across all three of those geographies, US, UK, and Malta, is the improving sentiment about the economy compared to a year ago. So when you think about where we were last year and some of the activity or lack of activity that was happening, that is the one factor of the confidence index that is backward looking. And that's certainly something that's really driving the index and that improvement. So better than a year ago. So let's dig into those 6 factors that actually comprise the index. And Nathan shared some of those with you. And we'll start with the economy. And what we're going to look at here is just the proportion, the percentage that said expect the economy to improve, because that's what we're looking at with that optimism, the increase in optimism over time. So the first is looking at the economy compared to a year ago. And across the board, this is where we really saw a huge jump in every area. So definitely feeling better than we were in June 2020. So we expect that when you're at the bottom, there's nowhere to go but up. So we do expect that to be a big increase, but that's really a key part of what was driving the overall CEO confidence index this quarter. And you can see in Malta, while it's not nearly as high, just 26%, saying the economy recently improved, what's driving that that's a 19-point improvement. So while you might look at that as a low percentage, that improvement from Q1 to Q2 is pretty significant. And the rest of our indicators are going to be forward-looking. So over the next 12 months, what are we seeing in terms of the economy? Now in the US, we've started to temper our optimism, maybe reaching that peak, thinking that the economy is much better. We've seen a lot of pent-up demand. Maybe it's not going to be quite as optimistic looking forward. UK has stayed stable, and this is really where we see the Malta again increasing. And all 6 of the factors in the Malta data, as Nathan shared, have jumped pretty significantly, 35-point increase from last quarter to this quarter. And again, if that's just a point in time and things have changed that are going to make that even more optimistic, then you know that this is on the cusp of what happened was CEOs were thinking as you headed into that. The next factors we'll look at are revenue and profitability looking forward. And there's great optimism. And we often find this is that sometimes in the US, while the sentiment about the economy might not be as strong, we always see our CEOs have greater optimism about their business. And that's certainly what we're seeing here with revenue projections. So very strong revenue projections over the next 12 months. And that was another big increase for Malta as well. 78% of US and 83% of UK expecting increased revenues. And so you're climbing to reach those levels, and we're very curious to see what happens next quarter. And profitability is interesting because as we see the rising cost of everything, inflationary pressures, cost of raw materials rising, cost of wages increasing, as Nathan shared. So profitability is an interesting one to look at to see how that's changing and the gaps between increased revenues versus increased profitability. And so often you have some choices with that. You can choose to absorb those costs and have them eat into your profitability, or pass those on to your customers in the form of price increases. So that's what we're seeing increasingly, is that those price increases are going to be passed on to customers over time. Our last two indicators for the confidence index are hiring and investment plans. And I'm going to spend a little bit of time talking about talent because that is so significant. I know for those of you who heard Joe Galvin last quarter, that's something that we have been talking about a lot. It's something we're definitely challenged by internationally, is talent. But when we look at moving ahead and that pent-up demand, the revenue projections that you're anticipating, what you need is the talent to actually be able to capitalize on those opportunities. So we're seeing that the fixed investments are increasing in the business. So that's not at the pace that we see the increases in talent. So in the US, 71% are planning to increase the workforce over the next 12 months. UK has tempered a bit, 60%. And in some cases, we see that maybe the hiring's already taking place, or just challenges and new solutions coming into play, like automation or developing the existing workforce. So that's what we're really seeing across international, from the US and the UK, and how Malta is comparing. But again, the increases show great optimism and momentum as you head into the summer months. I know big tourism markets and opportunities for you there. So very curious to see how this trajectory and this trend might continue. Now, as Nathan said, we're seeing the hiring challenges that are impacting operations. This is the Malta data, but both US and UK are pretty much the same. 62% of our CEOs that we surveyed in the US and UK say that they are not able to operate their business at full capacity due to challenges hiring. Now, certainly in the US, what we're seeing is more frontline, as well as skilled. I know that the bulk of where you were challenged in Malta was the skilled workers, but we are really seeing the challenge of frontline hourly workers, and especially in the hospitality industry. That's where we're seeing the biggest challenge. Restaurants not being able to open to full capacity, finally able to open to 100%, but yet they're not able to fill all the tables in their restaurants because they don't have the help. I think that's also something that we're seeing in the airline industry, like significant cancellations of flights due to the fact that airlines can't find the people, they can't find the pilots and the attendants to actually fly those planes. So we're seeing that across the board, that hiring challenges are impacting those operations. So that's the biggest challenge. We did ask of our CEOs in the US, what are the biggest leadership challenges you're currently facing right now? And that was an open-ended question, and we just completed that analysis this week to understand what those challenges are. So I'm going to share them with you today because I think they're going to be pretty similar to what you're experiencing. So hiring, we've talked about that, and we'll continue to share some information about how you might think about that, shift your perspective, but definitely the idea that capacity is challenged due to those challenges hiring, not being able to find qualified talent. And now what we're starting to see is with the competitive nature of people really rethinking what they're looking for in an employer at this time, we're starting to see retention be a big challenge as well. See a big challenge in growth. And tend to see this on two ends of the spectrum, although the biggest challenge was actually managing and scaling to reach the demand, that customer demand. We're starting to see some of that is talent, but some of that is also driven by the challenges we're seeing in supply chain. And I was speaking with someone, Vistage chair in the US the other day. We talk about the capacity and operations when we think about supply chain and the inability to meet demand. But one of the things she said that really resonated with me is that your brand promise, if your brand promise includes top quality, on-time delivery, best customer service, when you're challenged with the talent, when you're challenged with not being able to meet deadlines or timelines, that not only is an impact on your operations or revenue, but also on your brand and brand promise. So I thought that was really interesting that some of these operational issues are bleeding into your ability to market and actually fulfill on some of the competitive advantages that you might have put out there. We see inflation, the rising cost of everything and wages, so supply chain, inflation. And you touched on this, but we're really seeing a lot of challenges around the return to work and hybrid models. And employees coming out of the pandemic got a taste of what it was like to work from home, remote working, and many people are maintaining some level of hybrid model. In fact, in the US, we see about 70% are going to continue to have a hybrid model past the pandemic. So past the, beyond 2021, seems that some level of hybrid is going to be the model. But the big question is, what does that look like and how does that work? So when you initially invite people to return to the office, you might get to a point where you're requesting them to return to the office or the workplace, and finally you're going to actually require them. And certainly, in manufacturing, we have some members who've continued business as usual through the entire pandemic. But when you really look at knowledge workers or people and professional staff who've been able to work at home, that return to work is going to be a big challenge. And many companies are seeing that they are requesting people to come back. And now that's a new employee requirement. So your retention might be at risk if you're those companies that are considering coming back to the office full time, and you have some employees that, whether it's work-life balance, whether it's still ongoing healthcare concerns, taking care of elderly or children in the household, that's going to require really thinking about what level of hybrid can you maintain to be able to retain your employees. And finally, of course, morale and burnout. No one escapes the trauma of COVID. We had Simon Sinek come and talk to us last year about the impacts of COVID, and he talked about trauma. And certainly we're seeing the lagging effects of the pandemic, that we spent so much time and energy being able to be in crisis management mode over a very long time. So now we're seeing the lagging effects of the pandemic, whether it's on employees or the leadership team specifically. You all held it together to be able to maintain a level of business activity, but that might be catching up. And of course, there's always new stressors that we start to see as we make through the true pandemic to now some of the after effects. So these are really the leadership challenges. And I want to spend just a few minutes talking about talent management, because that is an area that you're really thinking about how you're going to be competitive. And certainly when you think about the job that you offer, the role, what kind of career opportunities are you offering and how are you competing in there? Employees are really looking for stability. We've lived with a period of uncertainty, and if that uncertainty continues in the business, those that are having the better momentum, better growth out of the gate, that might be more attractive to employees. And certainly compensation. Nathan talked about this, but we're seeing boosting wages is very significant, but there's other creative ways that you can really think about your talent. Now in the US, boosting wages is the top thing that we're finding small and mid-sized businesses are doing in response to challenges hiring. And in fact, some are even offering hiring bonuses. So really compensation has come back to be how we're competing in the US, which is a little bit different. We actually found last year, pre-pandemic, that developing the workforce was something that the US businesses were doing at a greater pace. And certainly that's actually what you're doing in Malta, boosting wages and adding benefits. And that's something that is that you are doing, but at a lesser pace than what we're doing in the US. And developing that workforce is something we'll talk about. But when you think about boosting wages, when you raise someone's salary, there's long-term implications to that, right? Then all of a sudden, every other subsequent salary increase is going to be on top of boosted wages. So we have some creative ways that our CEOs are thinking about increasing compensation or providing benefits, but without raising the salaries. So it's impacting the bottom line, but not exactly through salaries. So the idea about employee stock option programs, employee ownership, What does that look like? And performance incentives. So not exactly a straight salary increase, but performance incentives tied to different milestones or things that you can set out for employees to be able to increase their income without growing that bottom level of wages. Those are available on our vistage.com on the US site, and I've offered to Nathan that they can publish those or send links as well if those are things that are interesting to think about your compensation strategies. So coming back to being competitive in our comparisons, benefits, certainly that's what we're seeing. That used to rule the day. What kind of, do you offer free lunch? Is there a kombucha machine in the break room? What kind of vacation, personal time off? But that's a competitive factor to a lesser degree, as we're seeing that development is something that's really important. And that's certainly what you shared, that you were looking at in Malta as the #1 way that you are focused on addressing challenges hiring. Culture, building your culture, that this stems starting with the purpose. What's the purpose of your business? And is there really something, is the culture reflective of the values and really contributing to a larger purpose? Employees are looking at that. And then also flexibility. What kind of flexibility do I have as an employee, whether it's office-based or work from home or fully remote, to really be able to manage the balance of lifestyle that I've become accustomed to. So these are the competitive points that we're seeing. And as I mentioned, developing the existing workforce, that's something that used to be the top. In the US, 59% had reported that in our most recent survey, but we've seen that even as high as 71% of our CEOs saying that they develop existing workforce in response to challenges hiring. So that is a retention play. If I'm developing the existing workforce as a business leader, that is driving the loyalty and engagement and also improving the capacity. And again, just to highlight, in Malta, 44%, that's the top strategy for difficulty hiring. And there's 3 levels. There's 3 things that you're driving in a development program that we shared in our most recent report, Employee Development, the CEO's Competitive Advantage. And #1 is driving retention. And I know in the Q2 Malta survey, retention was the top area of concern. And when you look at your talent management and some of those areas, focusing on retention, when you're developing people, it's driving that loyalty. People feel invested in. And when they feel that commitment, then they become more dedicated and loyal. And it also protects revenue. We did find that with the companies through the pandemic that reported increased retention rates, they were also more likely to have stable or increasing revenues. So those employees, think about when you lose an employee, the cost of lost time or the cost of getting a new hire up to full productivity. Retaining people really maintains that level of being able to perform and meet demand. Certainly acquisition, acquiring new talent and hiring, development's a competitive advantage. Again, the commitment and your promise to them that you're going to invest in their career, that they can see where the trajectory of their time with you is going to go from their initial role, and what are the skills that they're going to receive, not just for their job, but for their leadership. And certainly development also drives performance, improving that productivity. And we see a lot of emphasis on job skills training or soft skills training. All of those are going to improve productivity. So looking at the components of the employee development program, and this is from the Q2 Malta data that shared last quarter, but just pulling this forward, because if we're focused on development, what are the components that you all actually report having in place? And certainly job specific sales training is what we see. That's important to get people up to speed. But as a lot of that investment tends to be on the front end of the employee experience, getting on board and up to speed, job specific training, coaching with managers. But think about how you're developing someone throughout the employee life cycle. And we see a leadership development program might be a blind spot that we see. And certainly this was the same in the US for some of our CEOs. But investing in leadership, everyone technically is a leader in their role. It doesn't matter their level in the organization. They have the opportunity to demonstrate leadership. We had the opportunity to speak to one of our speakers of the year, 𝗀𝗂𝗀𝗀𝗀 in the US, and he shared that they don't think that leadership development is a privilege. They think it should be for everyone. So really recommending breaking down those barriers of only the elite few get to participate in leadership training programs, but making that more widely available. And the other impact of leadership development is you've all heard that people don't leave bad companies, they leave bad managers. So when you're investing in leadership development of your managers who are managing the frontline experience, not only are you investing in those managers, you're also investing in the experience of all the people that report to them by building their skills and capabilities and making them a more effective manager. So I want you to think about these components in talent management, because that's one of the top things, and the resources that you have within Vistage and share best practices, sharing within the chamber. And this is how that we can provide some perspectives and data, working in partnership with Nathan and his team to really help guide you in, as he said, in some of those decision-making decisions, offering the data, the perspectives, and the insights that are going to help you optimize those decisions as you look forward to the year you have ahead with some great optimism. So thank you so much for your time. And Keith, I will send it back to you.
Fantastic. Thank you so much, Jen, for your detailed presentation and insights. Very insightful there. It's somehow encouraging to see that the trends in Malta are quite aligned internationally. The sense of optimism is very similar to that when compared to the US and UK. So we'd see the same optimism and same trends are sustained in the forthcoming index, reflecting possibly last week's announcement. So we do have some questions which I'd like to invite yourself, Marisa, and Nathan possible to answer. So any attendees who wants to share his questions, or you have any clarifications you want to share with us, feel free to just chip in, ask your question via the Q&A. So the question here from Centecom is regarding the challenge regarding flexibility, working from home. It's not always possible as you process data. So this particular participant represents a call center, and he's saying it's not always possible as you process data on behalf of clients. And working from the office allows more control over this, whereas working from home opens up Pandora's box. So, and it was somehow intriguing to see that most respondents from Malta, they're seeing their employees returning to the office. So while a year ago we were saying post-COVID, the future of work would be more like a hybrid model, this time around there's a change in trends. So what's your take on that?
If I go first, I think there's a number of things here. One is the fact that obviously human nature is societal. So we like to see our colleagues, we like to be with the people we work with, and that helps create rapport. So the tendency to want to go back to the office is there. But I think we'll see a bounce back of that once we go back to the office, that we start to miss the freedom and flexibility of working from home. So I think there's going to be a sort of a self-leveling over time. When it comes to certain companies, we said obviously with manufacturing, where you have to be there to man the machine, there is no option. However, in other industries, I think with technology, there are possibilities to improve the flexibility to have people work from home. And even call centers nowadays are moving towards technologies that allow confidentiality, encryption, for that to be able to happen. Yes, it's a cost to the business, and I think the business needs to evaluate that cost compared to the potential loss of employees who want to have a hybrid setup. And it's a challenge, and I think that the CEOs that are scratching their head trying to find ways to solve this are brave people that need to think about the implication of not changing the way that they are used to working, because of the fact that some people now will not want to go back to the office full time. So yes, these are challenges that we can see, but I think they can be overcome with the use of technology, which is ever improving and ever being enhanced for remote work.
Fantastic. Thank you so much, Nathan. I don't know, Marisa, if you have any
Yes, I think a lot of companies at the moment are calling back in their employees even to align. I think this is an important aspect of the management of businesses. And we have to bear in mind that businesses went online overnight. It was not a planned transition. And I think going forward, we will face a situation where traffic congestion, for example, will force us to consider remote working options precisely to ease a little bit the stress on people commuting to work. So, but I think it's in that case, we can plan things better than we did in March when we overnight moved from in the office to working from home, and in March of 2020. So I think eventually, yes, there will be a leveling, and companies that can possibly work hybrid will eventually opt to work hybrid to be able to keep their staff happy and to be able to have this combination of face-to-face communication within the office, which is a very important element of team building, but also to be able to give their employees the perk, in inverted commas, of being able to work from home for a couple of days a week. And this is where I see it going personally, long term for those industries, again, where this is possible to do. I think also the work from home setups allow us to tap into portions of the labor force that we couldn't tap into unless we offer this flexibility. I could see also the possibility of a lot of female employees, for example, who work reduced hours, working full hours by doing the additional hours from home. So I think this is a setup that we will end up exploring as a matter of necessity, because the shortages that we are facing in terms of human resources are huge, and they are probably the major bottleneck that we have. I mean, it was interesting even in seeing the international comparison. It's clear that we don't have an issue with creating jobs. If anything, we have an issue with motivating investment when compared to UK, US. And maybe policy has been concentrated on creating jobs, where the private sector actually has a lot of vacancies, whereas policy would better shift now to facilitating investment, which will become more of a challenge, particularly with the change of sentiments following last week's decision. So I think this is a very important thing to consider, because while in the survey we've seen total 90% saying, look, the level of investment will either remain the same or increase, or the level of employment will either remain the same or increase, which, considering that the baseline is pandemic phase, this means effectively increase, because during the pandemic, most employees were actually working some reduced form of hours. So keeping the same workforce is actually increasing output, increasing labor hours. So I think we really need to consider as a country how to shift our focus from jobs to investment, because if we have investment, the jobs will be created as a matter of course. But if we focus only on jobs, we will end up having a lot of low value added jobs, because it is the facilitation of productivity through investment in technology and other enhancing capital investments that will help us increase our value added, increase our productivity. And this is where the focus, I think, needs to be now.
Thanks, Marisa. If I may, sure, Nathan, go ahead.
I think on the previous issue with regards to human resources, also leaders need to be maybe sort of be a bit smarter how they job carve, because there are we know that when there is autonomy with individuals, their performance increases. So by default, if people are more autonomous, they are going to produce more. But also understanding what jobs can be done from home and what jobs require you to be in the office will allow some flexibility, more perhaps than you thought. So I know many CEOs who are saying there's certain thinking time I choose to do from home because I won't be distracted, or admin stuff that I need to catch up with, or catching up with emails I can do in the morning and save myself 2 hours of traffic. So this is the type of flexibility. It's not necessarily, everybody's going to work remotely and we're only going to speak to each other on Zoom. This sort of micro flexibility here and there will make a difference to productivity overall.
And if I may ask you a personal question following what 𝗀𝗀𝗀𝗀𝗀 said earlier on regarding the potential investment from businesses in automation to possibly address the labor burden on them. I've noticed that like 63%, roughly 63% of Maltese businesses are willing to invest in automation. I don't know if the trends reflect those you're reporting in the US and the UK.
It does actually reflect very similar trends to that, about 60%. And actually there's a number of people who are already invested and then a chunk that have planned to invest. So I think in the US, 45% have already invested in automation and another 25% plan to invest in automation. And you think about that, it's not always just automation in terms of actually doing something in the factory floor. Certainly that is something replacing what someone is doing physically. But automation comes in the form of chatbots for customer service. It comes in the form of, artificial intelligence that helps do things faster. So in some cases, it might make employees more efficient. It might require fewer employees, but definitely we're seeing that same trend of really exploring how can we reduce that labor burden. And I think that's going to be important because the economists we work with in the US, ITR Economics, they are predicting a global depression in the 2030. And a lot of that is due to the shifting demographics of the workforce. The workforce is going to get smaller. So really thinking about automation and how do we scale up and reskill employees in preparation for that is going to be important.
Fantastic, thank you so much. And I don't know if you have any questions from our attendees. Otherwise, we can wrap up this webinar. May I just remind you to participate in our next event, 5th of July, regarding another challenge which our businesses are facing, particularly in the European Union, the single-use plastics. Together with the government, we're working on an information session regarding the impact of such directive, the European Union directive. So please feel free to join our next event on the 5th of July. Check in our website, 𝗀𝗂𝗀𝗀𝗀𝗀 to register. And we look forward to seeing you there on the 5th of July. So, Anne, thank you so much for being with us this afternoon, for your wonderful presentation. Nathan, likewise, thank you so much. Always a pleasure having you. 𝗀𝗀𝗀𝗀𝗀, thanks for your time and for your insights. And all our attendees, thank you so much for your time. We really appreciate and hope these results and the survey index helps you decide for post-COVID Malta and for post-COVID business as well, and will be a baseline for future reference. So thank you so much and wish you all a very nice afternoon.